I mentioned US housing as obviously all the attention has gone towards that mega cap growth AI winner space. And in the background, the US home builder index is up 29% year to date. And it goes to show you that when you are thinking about the current market environment, there are some funny and unusual things going on, and it can pay to take sometimes a contrarian view rather than looking at those expensively valued mega cap names. So in terms of the US housing market, we know the increase in rates has occurred at a record pace, and it's caught both buyers and sellers off guard. So for sellers, they don't want to remortgage at a mortgage rate of over 7%, so they're not willing to move. And for buyers, they're locked out of the housing market. So there have been forecasts of doom and gloom around the US housing market, but house prices are only down 4% from their peaks. Now, what is going to stimulate a flood of transactions? Well, buyers and sellers are actually telling us that it will be lower interest rates. So many in the market are actually waiting for lower rates, again, having the perverse effect of lower interest rates potentially leading to lower home prices in the US. Now, that, of course, there are further dynamics at play, but I think it's really, really interesting at the moment. And you've seen those US housing beneficiaries perform particularly well given the current market.
And they're also, the beneficiaries of the fact that, a lot of these smaller home builders are struggling right now, and they've got pretty strong balance sheet at the same time. But I've got to ask you, in that respect, though, is there more upside? Because, like you mentioned, they've been on a run of late. Is there still the potential to see any kind of, PX gain as opposed to just collecting those that pay our dividends?
Yeah, so the US housing market exposure that we have, so carrier via HVAC, heating, ventilation, air conditioning. We have Tektronic, Hong Kong listed, dominant in power tools. So for those that want to renovate and refurbish. And then we also own Weyerhaeuser, which is a timber REIT. So we do think that the US housing market has further to run. The reason for that is there's been a chronic undersupply of new builds, in particular since the global financial crisis, particularly given the level of household formation. You also have structural factors at play, pent-up demand for homes post-COVID, but also a key cohort of the US population in terms of the millennial demographic. And now we're entering into that period of household formation where they want to buy a home. And if they can't get it by the existing dwelling stock, then they're looking at new builds in particular. So we're very comfortable with our US housing exposure. And a number of those names, including Tektronic, benefiting from the shift away from fossil fuel or petrol-derived power, and Carrier in particular benefiting from the US Inflation Reduction Act and subsidies and drives for increased inefficiency from the items that heat and cool our homes and businesses.